If you walked into a coffee shop today and tried to pay for a $4 latte with a heavy gold coin, the barista would look at you like you had lost your mind. We live in a world where money is practically invisible. We tap plastic cards, beam digital balances across smartphones, and blindly accept colored slips of paper without ever questioning their value. We trust the dollar completely. But if you took one of those modern dollar bills and traveled back to the streets of New York or Philadelphia in the early 1800s, handing it to a shopkeeper wouldn't buy you a meal. It would get you thrown out onto the street as a swindler. To the founding generations of the United States, paper money wasn't just viewed with mild suspicion. It was despised as an outright scam, an instrument of legalized robbery, and a direct threat to human liberty. They trusted only one thing: hard, clinking metal, gold and silver. To understand how the greenback eventually conquered America, you first have to understand why early Americans would rather hide a stash of foreign silver coins under their floorboards than hold a piece of American paper. The psychological scar ran deep, and it started with the birth of the nation itself. When the Continental Congress desperately needed to fund the Revolutionary War against Great Britain, they didn't have mountains of gold or silver. So they did what governments always do when their backs are against the wall. They started printing paper money, known as Continentals. At first, the system worked. But as the war dragged on and expenses skyrocketed, the printing presses ran non-stop, triggering catastrophic hyperinflation. By 1781, a pair of shoes in Virginia cost £5,000 in paper currency. Farmers refused to sell their crops to George Washington's freezing army because they didn't want to be paid in worthless paper. People lost their entire life savings in a matter of months, and soldiers returned home from the battlefield with sacks of currency that couldn't even buy a loaf of bread. The collapse was so traumatic that it birthed a bitter catchphrase that echoed across the country for decades: "Not worth a Continental." That financial disaster was so vivid that, when the Founding Fathers gathered in Philadelphia to write the Constitution, they effectively locked the door against paper currency. They explicitly wrote that no state could make anything but gold and silver coin a tender in payment of debts. In their eyes, real money required intrinsic physical value. You couldn't fake the weight of a Spanish silver coin, or what people commonly called a piece of eight. You could bite it, weigh it on a scale, or melt it down into jewelry, and its physical value remained unchanged regardless of which government rose or fell. A piece of paper, on the other hand, was merely a promise, and in the rough-and-tumble frontier of early America, nobody trusted a promise. Yet this hard money obsession created an impossible economic bottleneck. America was expanding at a breakneck pace. Canals were being dug, railroads were stretching toward the frontier, and bustling manufacturing cities were springing up overnight. A booming, industrializing continent couldn't survive on a limited, clunky supply of Spanish silver and British gold coins alone. There simply wasn't enough physical metal in circulation to fund the explosive growth of the nation. The country desperately needed credit and currency to move faster. But since the federal government refused to print a national paper dollar, someone else stepped into the void. What happened next triggered the most chaotic, lawless, and bizarre era in American financial history. A time when literally anyone with a printing press could create their own money, turning everyday shopping into a high-stakes game of Russian roulette. Welcome to the free banking era, a three-decade wild west of finance, where the national banking system had been effectively destroyed, leaving individual states to make up their own rules. Without a central federal currency or a national bank to keep order, private state-chartered banks started designing and printing their own paper money. And when I say banks, I don't just mean professional financial institutions with marble columns and heavy iron vaults. Railroad companies, local general stores, insurance firms, hotels, and even churches suddenly decided they were in the money-making business. By the 1850s, the United States didn't have a single, unified dollar. Instead, thousands of different banks were printing their own unique cash. There were more than 8,000 completely different varieties of paper bills floating around the country, featuring different sizes, colors, and elaborate artwork ranging from portraits of local politicians to pictures of cows, ships, and steam trains. In theory, every single one of those colorful paper bills was backed by real gold or silver coin sitting in the issuing bank's vault. A $5 note from the Planters Bank of Georgia was supposed to be a literal receipt that you could trade in for 5 physical silver dollars whenever you wanted. But greedy bankers quickly realized a lucrative, fraudulent loophole. What if you printed a mountain of paper notes and loaned them out at high interest, but set up your physical bank branch in the middle of a dense, swampy forest or deep in the frontier backcountry? These remote institutions became known as wildcat banks, named because they were located out in the wilderness where only wildcats roamed. If a merchant in New York or Chicago ended up holding a stack of wildcat notes, it was physically impossible and downright dangerous to travel hundreds of miles through mud trails and wilderness just to redeem them for metal. The banks essentially printed free wealth while deliberately making it as hard as possible for anyone to call their bluff. Now, imagine being an everyday shopkeeper trying to run a grocery store in Boston or Detroit during this financial madness. Every time a customer walked up to your counter to buy a barrel of flour, they might hand you a piece of paper printed by a bank you had never heard of, located 500 miles away. How did you know if the bank was actually solvent? How did you know if the bill was a fake? Counterfeiting wasn't just a casual crime. It was a massive, industrialized profession, with criminal syndicates churning out thousands of fake notes daily. To survive, every merchant had to subscribe to weekly publications called banknote reporters and counterfeit detectors. These were thick, encyclopedia-sized booklets that listed every known bank in America, along with its current financial reliability rating and detailed descriptions of known counterfeit bills. Every retail transaction turned into an intense, high-stakes negotiation. If you handed a shopkeeper a $10 bill from a well-respected bank in Philadelphia, he might accept it at full face value. But if you handed him a $10 note from a sketchy wildcat bank in rural Indiana, he would consult his thick booklet and tell you he'd only take it at a 30% discount, meaning your $10 bill only bought $7 worth of groceries. And if news had arrived by telegraph that morning that the Indiana bank had shut its doors, your hard-earned cash was instantly transformed into worthless waste paper. Everyday Americans were constantly losing their savings to sudden bank failures and rampant fraud, fueling a deep, boiling resentment toward paper currency and reinforcing the widespread belief that paper money was an outright scam. The entire American economy was a chaotic house of cards, teetering on the edge of total collapse. And then, in 1861, a cannonball slammed into Fort Sumter, igniting the Civil War and forcing a standardized dollar onto a desperate, fractured nation. When Abraham Lincoln took office in 1861, the United States Treasury was practically empty. Modern wars are famously expensive, but the Civil War was an economic black hole that consumed resources at an unprecedented rate. The Union Army was spending over $1 million every single day, an astronomical sum at the time. Treasury Secretary Salmon P. desperately tried to borrow hard coin from Eastern bankers to keep the war machine running. But when the Union suffered early, devastating military defeats at Bull Run, a wave of sheer panic swept the North. Nervous citizens and conservative bankers alike began hoarding hard currency. Gold and silver coins literally vanished from daily circulation overnight as people buried them in gardens and hid them in walls. By the final days of 1861, New York banks completely stopped paying out gold. The government couldn't pay its soldiers, buy weapons, or supply its troops. The Union was teetering on the edge of total financial collapse before the war could truly even begin. With their backs against the wall, Lincoln and Congress made a radical, deeply controversial decision that would forever alter the course of American finance. In 1862, Congress passed the Legal Tender Act, authorizing the Treasury to print $150 million in brand new national paper currency. Unlike the chaotic notes of the free banking era, these new federal bills weren't backed by a single grain of gold or silver sitting in a government vault. They were backed by nothing more than the authority, promise, and future tax revenue of the United States government, a radical shift into what we know today as fiat currency. To prevent the rampant, industrialized counterfeiting that had plagued the country for decades, the Treasury turned to advanced printing technology. They commissioned the American Banknote Company to print the bills using intricate, microscopic geometric engraving and a patented, chemically stable green ink on the reverse side of the paper. This vibrant green ink couldn't be easily removed, nor could it be photographed and duplicated by counterfeiters using the crude camera technology of the day. Because of that distinctive green artwork on the back, the public quickly dubbed the new notes Greenbacks, a nickname that stuck so hard it still defines American currency today. But printing money was only half the battle, forcing a skeptical, hard money-obsessed public to actually trust and spend it was a completely different war. Why would anyone accept paper when the bitter memory of the worthless Continental dollar was still burned into the national psyche? To force adoption, Congress added a powerful mandate to the law. These notes were declared legal tender for all debts, public and private. By law, if a debtor offered to pay you in greenbacks, you had to accept them at face value, or the debt was legally canceled. There was no more haggling over discounts or consulting counterfeit detector booklets at the grocery store counter. However, Salmon P. knew that the greenback would never truly command the economy as long as thousands of chaotic, private state banknotes were still flooding the streets. To establish total supremacy over the nation's money supply, Congress enacted the National Bank Act of 1863 and followed it up with a ruthless financial weapon, a crushing 10% tax on any paper currency issued by state-chartered banks. Overnight, printing private bank notes became completely unprofitable. The wildcat banks were regulated into extinction, their colorful bills vanished from circulation, and the Civil War successfully forced a standardized dollar onto the nation. The greenback stood triumphant as the sole paper currency of the United States. When the smoke cleared at Appomattox in 1865, the Union had been saved, but the financial landscape of the United States was unrecognizable. The federal government had successfully forced the greenback into every corner of the American economy, printing over $400 million of unbacked paper currency to fund the war. Yet the moment the cannon stopped firing, an explosive new battle erupted, not on a blood-soaked battlefield but in the halls of Congress and across the rural farmland of America. The nation was suddenly face to face with a profound, existential question. What actually gives money its value? For nearly a century, the deeply ingrained American belief was that real value lived strictly inside physical metal. Now, millions of everyday citizens were holding green paper notes that had zero connection to gold or silver vaults. The wealthy financial elites of Wall Street, alongside Eastern creditors and conservative politicians, were deeply unsettled by this new reality. To them, the greenback was always meant to be a temporary emergency measure, a necessary evil born out of wartime desperation. Now that peace was restored, they demanded an immediate return to the traditional, hard money, gold standard. They wanted the government to systematically pull greenbacks out of circulation and burn them until every remaining dollar in America was once again tethered to a literal piece of metal. They argued that unbacked fiat currency was an inflationary poison that would inevitably destroy the nation's credit on the global stage. But when the Treasury actually attempted to shrink the money supply and destroy the paper cash, a massive, unexpected political rebellion erupted from the working class. Millions of struggling farmers across the western frontier and the agricultural South had borrowed heavily to buy land, seed, and new farming equipment during the wartime boom. They quickly grasped a fundamental rule of economics that the wealthy bankers desperately wanted to ignore. Inflation is a debtor's absolute best friend. When there was plenty of paper money circulating in the economy, the cash prices for crops like wheat, cotton, and corn stayed high, making it relatively easy for farmers to pay off their fixed bank mortgages. If the government destroyed the greenbacks and forced the economy back onto a restrictive gold standard, the total supply of money would violently shrink. Crop prices would plummet into the dirt, debts would become twice as hard to pay off, and millions of working families would face catastrophic foreclosure at the hands of Eastern banks. In one of the most ironic psychological reversals in American history, the very paper currency that the founding generations had despised as an instrument of legalized robbery was suddenly embraced by the working class as a shield of economic freedom. The passion for paper money grew so intense that farmers and labor unions joined forces in the 1870s to launch an entirely new political force, the Greenback Party. They didn't just want to protect Lincoln's paper dollars. They demanded that the printing presses be turned back on to flood the country with even more cash, arguing that money should be a flexible tool controlled by the people, not a weapon hoarded by elite bankers in New York. For over a decade, this fierce financial civil war paralyzed the country, fueling violent labor strikes, political riots, and bitter elections. The fate of the American dollar teetered on a knife's edge until Congress finally enacted a daring, high-stakes gamble to settle the war over paper once and for all. That high-stakes gamble was the Specie Resumption Act of 1875. Congress knew they couldn't just abolish the greenback without triggering a devastating economic rebellion, but they also couldn't let unbacked paper float indefinitely without appeasing the conservative international financial markets. So, they proposed a fascinating psychological compromise. The government announced that starting on January 1, 1879, 4 years in the future, the United States Treasury would officially begin redeeming any greenback presented at its counters for literal gold coin. It was a brilliant game of financial poker, but it set off a ticking time bomb. For 4 anxious years, the nation held its collective breath. Conservative bankers predicted total catastrophe. They warned that the moment Treasury doors opened on New Year's Day in 1879, panicking citizens and foreign speculators would line up for blocks, dumping mountains of paper currency to strip the government of every last ounce of gold in its vaults. To prepare for the impending onslaught, the Treasury quietly built up a massive defensive war chest of over $100 million in gold coin, bracing for what many expected to be the greatest bank run in American history. When the morning of January 1, 1879, finally arrived, Treasury officials stood behind their mahogany counters, watching the clock strike business hours, sweating in anticipation of the crowds. But then something extraordinary happened. Practically nobody showed up. Across the entire city of New York, the financial capital of the nation, citizens presented a meager $135,000 in paper notes to be swapped for coin. In fact, by the time the business day ended, the Treasury had actually received more gold from citizens who walked in wanting to trade their heavy, cumbersome metal for convenient paper greenbacks. It was one of the greatest psychological masterstrokes in economic history. The very moment the American public realized that their paper dollar was reliably guaranteed and could be converted into hard gold whenever they wanted, nobody actually felt the need to convert it. The paranoia evaporated overnight. Because the promise was finally trusted, the paper itself became just as valuable as the metal it represented, except it was lighter, easier to carry, and infinitely more practical for a fast-paced, industrializing continent. The greenback had survived its ultimate trial by fire, and over the next century, the American dollar continued its dramatic metamorphosis. When the Federal Reserve was established in 1913, the country finally created the unified, elastic central banking system it had desperately lacked during the Wild West days of the free banking era. During the depths of the Great Depression in 1933, President Franklin D. Roosevelt took the radical step of ending domestic gold redemption entirely, making it illegal for everyday citizens to hoard gold coin. And finally, in 1971, President Richard Nixon completely severed the dollar's remaining link to international gold, officially transforming the greenback into a pure fiat currency backed strictly by the economic might, authority, and faith of the United States. It took nearly 200 years of hyperinflation, wildcat fraud, civil war, and bitter class rebellion, but the transformation was complete. The despised piece of paper that early Americans once viewed as an instrument of legalized robbery had become the undisputed reserve currency of the globe. Today, we don't think twice about exchanging digital balances and green slips of paper for our daily needs. But every time we reach into our wallets, we are holding the surviving victor of America's longest and fiercest financial war.